Welcome to Bloomberg Technology. I'm Emily Chang in San Francisco. Tesla shares spiking after hours after the electric car maker says it is still on track to deliver 500,000 cars this year. Microsoft shares declining after the bell. However, on the back of its earnings results, sales of its Azure cloud product disappointing, though there was a revenue beaten. Overall, stocks closing slightly up today. Investors seem to be more optimistic as Congress continues to work on another federal relief bill. Meantime, the president at the bottom of the hour is scheduled to deliver another news briefing. This as tensions between the U.S. and China continue to escalate and fast. The U.S. has ordered the Chinese consulate in Houston, Texas to close. China is calling for the U.S. to revoke this decision and warning the United States has far more diplomatic personnel in China then vice versa. Joining us now to break down the market action are Abigail Doolittle, who's been following all the back and forth, and all eyes, Abigail, as we've said all week, on Tesla right now. What are you seeing?
Well, Tesla, certainly, they delivered, considering that you have the stock up more than 280% on the year going into that report. And before we take a look at that stock specifically, it has been another interesting, slightly choppy day, actually more sleepy. And then at the end of the day, Emily, we saw this late day surge climbing. Not huge gains, but we had stocks flat. We even had the Nasdaq at one point down. And at the end of the day, the S&P 500 and the Nasdaq both higher. And this seems to perhaps have to do with the fact that we once again have the Fed balance sheet expanding. That's driving the dollar lower, helping out these major averages. However, the New York FANG index, that was down ever so slightly, despite Microsoft climbing into its report, which we'll also be talking about in a minute. And there were renewed tensions, of course, between the U.S. and China, with the U.S. basically closing down China's consulate in Houston. The HXC, which is a China stock index here in the U.S., down 1.8%. So that's sort of a broader recap, a little bit of a risk appetite, but more neutral. As for Tesla, risk on, risk on, and risk on. And as I was mentioning, they basically delivered. The stock up huge on the year, now up about 290%. And relative to the factors that you mentioned, that they're saying they're on target to deliver 500,000 vehicles, they also put up a fourth consecutive gap profit in a row. That means they can be included in the S&P 500. All sorts of indexes, and managers have to buy it. So that's another positive for the stock.
Meantime, Abigail, Microsoft shares still down after hours. The company beat on revenue in the quarter, but cloud sales disappointing. Give us some more of the details there.
Well, this is really a case of price to perfection. You've had this stock absolutely on fire this year, and for good reason. The March quarter that they put up was very strong, really a beneficiary of the work from home trends. But a piece of that is that cloud business, and it just wasn't perfect. Investors wanted that. So quite frankly, you have traders and investors taking some chips off the table, down 2.6%, which is nothing relative to the huge gain on the year. It's going to be interesting, though, whether or not this sets off some jitters for some of the other big tech companies. Because if you recall, of course, last week, Netflix, not perfect. The June quarter was OK, but the guide. And so here you have another stock, similar situation, maybe an influence on tomorrow's trading, Emily.
All right, Abigail, thanks so much for breaking it all down. Abigail Doolittle there for us. I want to get back now to Tesla again. Shares rising on the back of its result. Tesla saying it is still on target to deliver those 500,000 cars before the end of the year, a big potential milestone. And as we know, Tesla shares have been going up and up and up over the last few weeks. Bringing us here to break it all down, we've got Craig Irwin of Roth Capital. Craig, as you look at the report out just minutes ago, what's standing out to you here?
So your recap just now is excellent. The key thing is $104 million gap profit, and now they can go into the S&P. That was widely expected. So the bears are going to pull this apart and say, how did they get there? ZEV and regulatory credits, $428 million, is a new record versus 354 in the first quarter, or 111 a year ago. So that the quarter really came from ZEV and regulatory credits. But we have to give credit where it's due to Musk. 90,000 units in a COVID quarter is a monster quarter. He has 3 plants under construction on 3 different continents. And, I think he has room to surprise investors with new initiatives and new opportunities for growth over the next couple of years. So, all in a good quarter, still some details we want to learn, but that's what the call's for.
That said, do you think Tesla deserves this market cap that makes it more valuable than any car company in the world?
My answer is simple, categorically no. So I'm out of consensus. I believe that Tesla's battery costs are actually quite a lot higher than what the whisper numbers are. My position is based on primary channel checks with the largest battery suppliers in the world. And, if that's the case, Tesla's pricing is really no different than VW or Porsche or Audi or BMW or Mercedes. And, many of my friends actually have the supply contracts to some of these other OEMs. And, yes, the competition has done a very mediocre job with their EVs they've introduced to date. But what investors are doing is they're treating Tesla like it operates in a vacuum and there's no real competition. Well, that's, not actually a reflection of reality. There's 180 EVs that are coming to market by 2025. And to bet that all of those are duds, I think is a risky bet. So, absolutely not. I don't think it's worth the valuation it's sitting at right now.
Now, I know that you are optimistic about Tesla's Mini, you say, the smaller EV, sort of like a Mini Cooper. But as you say, with more and more electric vehicles coming to market, certainly Tesla has first mover advantage here. But how do you expect those other electric cars to compete vis-a-vis Tesla?
So they've got to get out there and do a good job with their brand and then offer consumers a compelling proposition. So it's got to come into the market at the right price. And it's got to have the performance. We look at the Taycan. I was very optimistic about the Taycan before we actually started to see it on the street. And the performance of the Taycan just wasn't where I think Porsche wanted it to be. It wasn't where a lot of the buyers of Porsche typically want it to be. So, the enthusiasm for the Taycan has really fizzled. Porsche, I expect to come back. They're not a company that quits easily. And they have an opportunity to get it right over the next couple of years.
Meantime, what is your outlook on how many people are really going to be buying cars over the next 6 months? You've got tens of millions of people laid off. You've got far less commuting. Yes, people want to commute in private cars versus on public transportation, but how do you weigh all those things out? And can Tesla really hit that 500,000 car mark by the end of the year?
Yeah, I mean, Tesla's unusual. It's shown a thick layer of insulation between its own fundamental sales outlook and its execution versus the rest of the auto market. So the buyers tend to move very differently. Yes, in a country where there's 40 million people unemployed, you would think that the sales outlook was pretty grim. Tesla's customer base tends to be a lot more affluent, maybe younger. And I think the professionals that are buying these vehicles are maybe less impacted by some of the economic issues that are hurting many of us across the world.
Talking about the world, what do you see in the global picture? Obviously, there's the potential to enter India, and Tesla's saying they'll start delivering cars from their Shanghai factory next year.
Yeah, so the most interesting thing that we've seen as far as sort of global markets is the ratio of Model 3 sales to Model S and X sales in the China market, the count of quarters in. So it's sort of, install base is actually about 25% higher than what we've seen in the U.S. and the overall global market in aggregate. So, the Chinese market, the fact that you can sell a $50,000 car is great, but the fact that, you have, maybe a larger market than many of us were originally thinking is, even better for Tesla. And I would expect that to hold through to India as well as the mini car. The mini car might even, have a compounded opportunity there.
Craig, you're breaking up a little bit towards the end there, so we're going to have to let you go. But I do appreciate all of your insights. We got the most of what you had to say. Craig Irwin there of Roth on Tesla will continue to follow Tesla, of course, as the call begins at the bottom of this hour. Meantime, we're going to be talking about Microsoft beating on revenue, but not so great numbers in the cloud. We'll break it all down next. This is Bloomberg. Microsoft revenue rose in the latest quarter 13%, signaling persistently strong demand for its cloud computing software and services that are helping to keep workers connected around the world as so many of us shelter in place and work from home. That said, shares still down after hours. I want to bring in John Freeman of CFRA, who covers the company. John, why do you think investors are not so excited about these numbers today?
Well, I thought it was, they beat consensus, but I think that there was a lot of maybe hope for more significant upside, and I think that across the board, almost everything was definitely a deceleration from both significant sequential deceleration from the previous quarter.
What's your take on the cloud specifically? Obviously you've got investors with fairly lofty expectations, as so many different cloud companies have been critical in keeping the business world afloat. That said, things aren't going to change much, it seems, in the short term. Unfortunately, we're not going to be coming into a new normal for quite some time.
Well, yeah, I think actually that downturns, if you look at it historically, they tend to accelerate technology trends and particularly, enterprise software trends because they tend to come out the old stuff and they kind of pressure companies to, really, use more of the latest technology. It actually ends up being a catalyst. And certainly Microsoft's, Azure cloud grew 47% year over year. That is, tremendous. That is amazing. But it was, what was it, 50-something%, in the previous quarter. So I think it's all relative, right? I don't think that, the cloud conversion is going to, magically somehow accelerate overall, particularly for a company like the size of Microsoft. I mean, I think the hard reality is that, a downturn, it will result in lower growth, across the board, except for video games. I saw Xbox was up. Xbox content and services was up 65% year over year, which is kind of in line with our video game sort of thesis as well. Quite clearly, video games are doing quite well this year.
Right, and I can imagine a few people might have finally just bit the bullet and bought that Xbox as they shelter in place and their kids are out of school. John, curious for your thoughts on Microsoft Teams, which of course competes with Zoom and Google Meet. What's your outlook for that particular product?
Well, so I look at all of those products as kind of edging into another, sort of collaborative area. It's almost like monopolistic competition. You also have Atlassian's Jira product, which has real-time collaboration for software development, which is becoming an increasing thing. So I look at it as a bigger battle, and I also look at sort of the and that's why I think the sort of the regulatory pushes in these areas tend to be very ephemeral in terms of the results. So yeah, that's kind of how I view that space. And I think it's probably a lot more fragmented than, if you look at how actually people collaborate, real time or text, video, whatever. If you take a bigger picture look at it, I think you'll see that it is a much more fragmented and much less monopolistic sort of market than some regulators might say, for example.
All right, John Freeman, always love your energy. John Freeman of CFRA, who covers Microsoft there. Coming up, we're going to be talking Eventbrite. Every vote counts. Eventbrite is now committing to get out the vote this November with a new initiative. We're going to hear from the company's co-founder and CEO, Julia Hartz. Also, We will take you to the White House, a news conference scheduled to start at the bottom of the hour. When the president takes the podium, we'll take you there live. This is Bloomberg. With less than 4 months to go until the critical presidential election in November, Eventbrite is launching a new campaign called Ticket to Vote with the hopes of driving more voter registration and education on its platform. The company is partnering with Headcount as part of this initiative. Joining us now in an exclusive interview, Eventbrite co-founder and CEO Julia Hart. So Julia, obviously this is important. The mission is important. How exactly is this partnership going to work?
Thank you, Emily. Well, this year is an extraordinary time for the voting population. And while, COVID has virtually made in-person gatherings cease, online gathering is just growing tremendously. So we've seen 20x increase on our platform of online events. And that means that millions of people are coming to the platform to connect with one another. Our goal is to really lean into civic engagement and create a positive change by helping to make it's so easy to register to vote. So we've partnered with Headcount, which is an organization that has helped over 600,000 young people register to vote at live events. And we've taken their method online. So effectively, our creators can set an option in their event to allow people to just easily hit add to cart and be able to go through a registration flow to vote. And that is going to make it much easier for people to get educated and to make sure that their voice gets heard this election season.
Now, obviously, we're in the middle of a social, economic, and health crisis as we move towards this election. I'm curious how that's translated into activity on your platform. Are you seeing a rise in more sort of activism-related events?
Well, we have seen a rise of activism-related events throughout this entire year. I think that really the goal is to help voices that have been unheard be heard. And Eventbrite is that platform. So we're enabling our creators to use the platform for things that they'd be doing otherwise, being able to elevate voices, being able to educate people, being able to activate the action that needs to happen in our country. And I think that as we see communities come together online, there's been a tremendous rise in terms of using your voice to create positive change. So if you go to the Eventbrite homepage, you'll see thousands of social justice and racial equity education events. And that's not by accident. Our community has come together to really give this moment in time the significance that it deserves. And we're seeing the activity on Eventbrite just continue to grow and swell. And that's really something to be optimistic about and to be hopeful about.
Now, obviously, we've talked about how the in-person event business has been, at least it's certainly on pause, and it may be forever different. Are you seeing in-person events coming back at all, even as we come out of this, or will, a vastly larger percentage of events be virtual over the longer term?
Well, the live events business has never been more directly impacted in our generation. Certainly, you have to go way, way back to find a time where there's been such great disruption of something that is an innate human need, gathering together in real life. What we're seeing, though, is with the advent of technology and the benefit of us being in this age of innovation, people are finding each other online. So 85% of consumers who are attending online events knew the creator prior to COVID. So they're just finding them online. And creators are seeing the consumer behavior shift of the adoption of these online formats, and they're hosting more frequent live events. Now, I can't predict the future perfectly, but I can tell you what we're seeing now. Instead of large format in-person gatherings, we're seeing people pivot to more niche focused events online. So instead of a big music festival, for instance, we're seeing fan-fueled listening jams online, or living room concerts. Instead of, a big business conference, we're seeing more hyper local meetups happening. And as it becomes more safe for us to gather in person, we believe that we'll see more small format, hyper-local gatherings. People won't be crossing borders or traveling a far distance on airplanes, for instance, but they will be driving to see and connect with their communities. I think a fundamental question for the live events economy is really, when are we going to get back to those big scaled en masse events? And that's really not the problem we're trying to solve at Eventbrite. Our core market is about these small to medium size events, and we can scale up to hundreds of thousands of people in online gatherings.
Now, I know that gender equity is something that you're really passionate about, and we have sympathized as moms, as parents who work with schools not reopening in the fall. I wonder how you're thinking about this. The case has been made that this is much harder on parents, certainly, and working parents. How are you thinking about that, and how are you helping your employees navigate that with no end in sight to the sort of status quo?
Well, certainly in the U.S., we're faced with one disappointment after another, it seems, in terms of, the outlook on reopening schools. And, I think as we look forward, we have to prepare for the worst. So as an employer of, over 600 people around the world, where we largely have gender equity, it's really imperative for us to think about this as a family problem, and even more so as a dependent care problem. So we're looking for ways to partner with other organizations to come up with creative solutions. We're starting to see communities come together to form pods for their kids to be educated together in a smaller environment, online if they're doing distance learning. And I think that especially for those children who are under school age, this is a real issue for everybody, and we're unified in the impact. My focus has really been on solutions that can help to drive us through this era in time without particularly women taking decades off the advancement that we've made in gender equity, which I know something you care deeply about.
Is the school and distance learning, actually, Julia, we're going to have to leave it there because we're running into this press conference coming from the White House. Julia Hartz, the co-founder and CEO of Eventbrite, always appreciate you joining us and for your insights there. Coming up, we're going to be talking about Affirm and Shopify teaming up to offer more flexible payment plans via Shopify's 1 million plus merchants. We'll have a wide-ranging conversation with Affirm CEO Max Levchin, and we are also standing by for a news conference at the White House. We'll take you there live when President Trump takes the stage. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Canadian e-commerce giant Shopify is teaming up with a U.S. partner, Affirm, to offer flexible payment plans to consumers. This stepping up Shopify's battle with Amazon to build a more customer-friendly shopping platform amidst a surge in online shopping during the pandemic. In a wide-ranging interview, I spoke to Affirm CEO and founder Max Levchin, who of course also co-founded PayPal, about everything from what the partnership means for his company to his thoughts on antitrust scrutiny of companies like Apple and Facebook in Washington.
It's massive. It's a giant leap for us towards basically total ubiquity. Shopify has served, as you said, over 1 million merchants and millions of consumers. And this is the moment where our product becomes available to all of them all at the same time. And so it's obviously giant. No better way to put it. I think we may have just won the buy now, pay later race, but we need to deliver on our promise.
So who's in that race? Talk about the competition and what it'll take to really win.
Fundamentally, we're all competing with credit cards. The company wasn't founded to be the best of a niche, interesting payment idea. It's the fundamental notion here is to provide a better, more honest, more transparent alternative to credit cards to consumers. And so we compete with revolving credit. That's what we're all here to do. The goal is to be as ubiquitous as credit cards and provide a better lower cost, higher quality, fundamentally more trustworthy service. And that's really what the race is.
Now, when I interviewed Toby Lutka, the CEO of Shopify, he said, if Amazon is building an empire, then Shopify is arming the rebels, the small and medium businesses on the platform. Do you think this gives Shopify an edge in its battle, quote unquote, with Amazon?
My honest opinion is that every single platform from Amazon on down will eventually offer a service like Affirm, an alternative payment approach like Affirm, because it is taking off like wildfire. We've seen extraordinary growth over the last decade of doing this, but also even just during the pandemic, as the offline sales shifted online, we've seen explosive, really just unbelievable growth. It's something that consumers have come to expect. So my guess is it will become table stakes for everyone, and not a unique advantage for any one platform.
Now, I know you can use Affirm's virtual card, as I understand it, to buy things on Amazon, but you don't have this kind of a formal partnership with Amazon. In fact, Amazon is also developing its own payments technology. Is this something that you would like to do with Amazon as well? Or does you doing this with Shopify now sort of preclude you striking a partnership like that?
I think fundamentally the mission for us is clear. We want to bring this better way to pay to everyone, like every consumer, every merchant. And so we're excited to partner with anyone who shares in that mission. I think the real goal is true ubiquity. So we'd absolutely be excited to work with any platform that will have us. Always here to partner.
I want to talk about the trends that you're seeing in the pandemic. Obviously, we know that there have been tens of millions of lost jobs, that has impacted discretionary spending, but also that a large chunk of what happened in physical stores has moved online. What are the trends that you're seeing in terms of how much people are spending, where they're spending it, and just how American consumers are hurting right now?
It's really all over the place in many ways, and it's stratified even more in terms of people's various situations. Personally, those of us who moved from white-collar jobs to their home offices, I think, went into a sort of spending setup blitz, if you will. In the early days of the pandemic, we saw unbelievable demand for everything: home office, home kitchen, home, anything that turns your house into a better place to do work and not have to leave the house was just on fire, and it still is. It really is growing. Meanwhile, travel is obviously decimated, and all of that speaks to the people who work in those industries. If you are a travel industry employee, your stability and your ability to predict your future financial state has just gone down. We saw growth on sort of two vectors as we were serving our customers. One is, well, I now buy more things online, so Affirm seemed like a viable option because we're primarily an online, although we now have plenty of offline locations as well, of course. But the other one was even people that normally think of themselves as, I don't pay for things over time. I just plunk down, my plastic and I pay it off at the end of the month, no big deal, have suddenly said, I don't know what my level of certainty is about my financial future. So I like the idea of stretching my dollars across multiple months because that gives me a little bit more stability and sense of availability of cash. And so we're still seeing those trends. I think obviously the unfortunate return of the virus midsummer has brought more uncertainty to folks. It seems that, and independent of what you think of the government, I think Treasury and Fed deserve unbelievable amount of kudos for supporting the economy, making sure that people are generally not falling off a financial cliff. Certainly looking forward to the next congressional decisions on more stimulus, which I think the country frankly needs as we try to cope with this virus.
Speaking of Congress, you are no stranger to big tech companies. Obviously, you co-founded PayPal. Next week, the CEOs of Apple, Alphabet, Facebook, and Amazon are going to be appearing before Congress on antitrust issues. Do you think there's a case for any of these big tech companies to be broken up?
So I think there are two things conflated in this one, and I am sort of a polar opposites opinion on the two topics. So antitrust, anti-competitive behavior, I think that is unequivocally bad. And I think Congress is doing its job by, and I'm sure it's no fun to be hauled out in front of Congress. And I sort of don't wish that upon myself or my friends or enemies. But I do think it is the job of our legislators and all the other branches of government to make sure that large companies don't abuse their power. However, I do think that breaking them up is a terrible idea. I think we compete on a global stage. Every one of these companies has significant global presence, and they compete with companies that have similar resources because of their scale. Enforcing antitrust law, making sure that people don't overstep what fair competition means, I think is a really, really important, powerful idea, foundation of our flavor of capitalism. I think stripping our economy of its most powerful defenders on a world stage is a bad idea.
So you think breaking up these companies would be a bad idea?
I do.
Why?
I think as they face their Chinese counterparts, maybe their European counterparts, there is power in bundling. There's power in having vertical integration. There's power in being able to operate at significant scale. Imagine Apple being forced to break everything into software and hardware, and maybe even hardware by line. Companies like Huawei have everything under one roof. They'll be able to outprice them and undistribute them.
But what if that stifles innovation for new American companies, new upstarts like Affirm once was?
Affirm is still very much an upstart. I'm not sure we're out of the little leagues just yet, but we're growing very quickly. But I don't think one precludes the other. I think it is the role of the regulators and legislators to level the playing field and make sure that competition is fair. I think the role of an upstart is to challenge the status quo and to go up against the Goliaths and be the striver and be smarter and execute faster and all the things that make startups great. I think breaking large corporations down into tiny little pieces to make it easier for me to compete with them is misguided, because their job is not to compete with me at all. It's to compete with the bigger guys from overseas.
Now, I want to ask you a separate question about Facebook, because I know that Affirm pulled its advertising from Facebook, and Facebook has been in the middle of this controversy over how it handles hate speech and specifically the president's posts. Why did you pull your advertising from Facebook? And do you think that Mark Zuckerberg is making the right calls about political speech?
First of all, I think it's super complicated. And I can honestly tell you, I do not envy Mark Zuckerberg, because he is facing some very weighty decisions. I do think they're trying. I believe them when they say that they are striving to do better. I think the very specific thing, and as someone who came to the US as a refugee from, at the time, a very anti-Semitic state for very specific reasons, I have a very strong held view that enforcing free speech is very important, and eliminating hate speech or controlling hate speech and beating it back, because it fundamentally is one step away from violence, and that's what it incites, is very important. And so the reason we spoke up and will continue to speak up is because it is the job of large, visible, important companies that are also public forums to help fight hate speech. That said, I am, again, as a refugee from a former Soviet Union, of all places, a big believer in free speech. I believe it is essential that opposing opinions, even if they're anti-Semitic, so long as they don't call for violence, are stated, and people can make their own judgment what is repulsive and what is an interesting debate.
Max Levchin there, co-founder and CEO of Affirm. All right, Apple released a study today noting the fees that it charges developers are on par with the rest of the industry. The iPhone maker laying out part of its potential defense as Tim Cook prepares to testify before Congress on Monday amidst antitrust scrutiny. For more, I want to bring in Mark Gurman, who covers Apple and consumer technology for us. Mark, Apple said not to think about this as the defense that Tim Cook will be making on Monday, but it is certainly part of the argument. Tell us more about what Apple had to say.
Hi, Emily. Yeah, you're absolutely right. This is definitely part of the argument. There have been developers and different government organizations scrutinizing Apple for the tax or commission or fee whatever you'd like to call it, on the App Store, which is 30% for paid downloads as well as in-app purchases and subscriptions for the first year, and 15% after the first year per consumer. And so this Apple paid, Apple commissioned study is saying that the Google Play Store has the exact same terms as the App Store. The Amazon App Store is 30%. The Samsung App Store is 30%. Microsoft is 30% in most cases. And some of the gaming stores like Steam, Nintendo, PlayStation, and Xbox are also 30%. But what Apple doesn't say is that a lot of these app stores are 30% because they're following Apple's footsteps. But still, nonetheless, they're showing that everyone is basically doing the same thing. So, why are we going after Apple?
What does Apple have to say about the fact that it is not only the gatekeeper, but it is also a competitor in the App Store? Of course, they've also got their own apps in the App Store, like Apple Music, which, as we know, the folks at Spotify have made quite clear.
Yeah, Apple's argument is that the App Store hasn't held back Spotify, but has instead let them basically become a giant public company that, by the way, sells far more subscriptions than Apple Music. So, their argument is that, the App Store has done pretty well for Spotify, and so it's not really a great argument to say that Apple is, hurting its rivals by operating the store while also being on there. By the same token, however, is Apple doesn't have a 30% tax to pay anyone because they do operate the store. And that's what some developers and competitors like Microsoft and Spotify have indicated to be, unfair.
Now, obviously, Monday, we've got a big day. You've got Tim Cook, Mark Zuckerberg, the CEOs of Alphabet and Amazon all preparing to testify. What do we know about how the hearing is going to proceed and how it might look different than others? As we understand it right now, they're going to be appearing virtually and not in person.
So that's right, Emily. It's going to be a virtual hearing. The latest news today is that Jack Dorsey, the CEO of Twitter, was invited to attend as well. The difference being that Twitter is just a very small, minuscule company compared to the other companies. And Twitter really has not had any antitrust issues. They've had tons of issues with, the government and President Trump and all sorts of things there. But the issue with, Amazon, Google, Apple is much broader in terms of antitrust, specifically Google with search algorithms, Apple with the App Store, Amazon with its own sellers on the store alongside their own devices and products. So it's a little odd that Twitter would appear there as well.
Yeah, that is certainly an interesting development. Meantime, we've got some headlines crossing the terminal that Apple will not pursue a deal to buy ARM, which is the chip maker. Many of their chips, we understand, are in Apple devices. It's a company that was more recently purchased by SoftBank. What can you tell us about this?
So ARM, owned by SoftBank, creates what is known as an instruction set, which allows the processors that Apple designs in its devices to communicate with its software. And basically, ARM's technology is really at the heart of most of Apple's products, as well as products from Amazon and other device makers, Microsoft as well, Samsung. And so whoever ends up with this is going to have a huge competitive advantage. However, the price tag is super high. It was a $32 billion price tag back in 2016, which is 10x what Apple's paid for its biggest deal, Beats, for $3 billion. So it seems very unlikely that Apple would make that deal. Also, regulatory concerns as well.
All right, Bloomberg's Mark Gurman, you'll be covering that along with us as that comes up on Monday. Thank you so much. Okay, coming up, some call it the Robin Hood effect, but the CEO of NASDAQ says retail investing has been a trend for decades. We're going to talk to Adina Freeman of the NASDAQ next. This is Bloomberg. The environment for retail investing has been strong for years. This according to NASDAQ CEO and President Adina Freeman, who spoke earlier about the democratization of markets and how China Public listings in the United States may change as the relationship between the U.S. and China evolves. Take a listen.
I certainly think that the environment for retail investing has really been pretty great over the last 10 years. Frankly, I think that the fees that retail has had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been a key trend that has driven, I would say, the U.S. markets. But so I do think that's a longer term trend. The fact that the commissions have gone to free certainly has driven more demand within the retail environment and retail investors coming into the markets this year.
Is it a free lunch? I mean, this is the key thing, and I go back, of course, to our relationship, Adina, with Arthur Levitt and his respect for the individual investor 30 years ago. Is it a free lunch? I mean, a Schwab says it's free. TD Ameritrade says it's free. You can trade NASDAQ shares, and it's free. Is it a free lunch?
Well, first of all, it really is free for retail, and I was at NASDAQ with Arthur Levitt during his tenure, and I do think that he really was on a mission to make it so we democratize access to the capital markets. And I think he went a long way in that regard. The online brokers have done an enormous amount to create services that really do benefit retail. And I do think that at the end of the day, they are getting a good experience. The spreads in our markets are extremely narrow, which means they are getting good executions. And they are now not having to pay commissions against and to those retail brokers to gain access to the market. So for them, it really is free access.
Adina,
to produce and deliver 100 million doses of their vaccine immediately following its approval. Hopefully the approval process will go very quickly, and we think we have a winner there. We also think we have other companies right behind that are doing very well in the vaccines, long ahead of schedule. As part of Operation Warp Speed, this agreement will also ensure that we receive an additional 500 million doses shortly thereafter. This is another crucial step in our effort to develop, manufacture, and distribute a vaccine in record-breaking time, really a very small fraction of the time based on previous schedules. I want to thank the FDA. I want to thank everybody involved. It's been an incredible process. As discussed yesterday, the China virus poses the greatest threat to our senior citizens, as we all know. The median age for those who die from the virus is 78 years old, and nearly half of the deaths have occurred among those living in nursing homes or long-term care facilities. That's really something. In other words, approximately half of the fatalities have occurred among less than 1% of the U.S. population. So think of that, less than 1%, half of the fatalities. So we know what to look for. From the beginning, we have made it our top priority to shelter our seniors. In early March, we announced guidelines suspending all medically unnecessary visits to nursing homes and prioritized resources for those facilities. And we gave it a very strong priority. FEMA has sent shipments to many different locations of protective equipment, and it's going directly to 15,400 Medicaid and Medicare certified nursing homes throughout the country. Today, I'd like to provide an update on the additional actions we've been able to take, and they've been very constructive. First, we're requiring increased testing of the nursing home personnel in states where you had the worst outbreaks. All personnel will be tested at the highest level. We're distributing 15,000 rapid point-of-care diagnostic devices to support this effort. These are the tests where it takes 5 minutes to 15 minutes. They're very accurate. They're very good. And we're sending them all over the country. And over 600 devices will be also shipped this week to additional facilities. Second, HHS will be distributing an additional $5 billion from the Provider Relief Fund to all nursing homes. Nursing homes in higher risk areas will be receiving more funding. This money can be used to address critical needs, including the hiring of additional staff, increasing testing, and providing technology support so residents can connect their families, and they can connect to their families. They are having a tremendous time. They want to be with their loved ones. They can't do it. So what we're doing is we're working it so that we can connect, have them connect with their families if they're not able to visit. Third, we've been identifying especially high-risk nursing homes and sharing that information with the governors so that the governors and their staffs can take appropriate action. We're able to find, because of the testing programs and other means, we're able to find certain areas that are very high risk. The governors can then take action. Additionally, CMS, CDC, and the U.S. Public Health Service are providing enhanced technical assistance and support, including visits to the highest risk nursing homes. And that's their priority right now. Nursing homes, but the highest risk nursing homes. CMS and CDC are implementing a national training program focused on infection control for those nursing homes that need it most. And we have them surveyed, and we have them mostly pinpointed. Over the past few months, we've created a surveillance system to detect outbreaks, and currently 99% of all nursing homes are reporting directly to it. So we have great data. When a nursing home has 3 or more cases, we alert the state and make sure that it responds very quickly. We check on it, make sure they respond very quickly. I want to send a message of support and hope to every senior citizen who has been dealing with the struggle of isolation in what should be the golden years of your life. We will get to the other end of that tunnel very quickly, we hope. The light is starting to shine. We will get there very quickly. But we send our love. We send a message of love. Very important. We're with you all the way. As far as the outbreak in the Sun Belt, I said yesterday we continue to vigorously combat the rise of cases in the South and Southwest and the West. We're closely monitoring and aggressively acting to control the infection in Texas, Arizona, California, Florida. Arizona is starting to come down. Done a very good job. They're all doing a good job. They're very talented people. There are likely a number of causes for the spike in infections. Cases started to rise among young Americans shortly after demonstrations, which you know very well about, which presumably triggered a broader relaxation of mitigation efforts nationwide, and a substantial increase in travel also was a cause. Increased gathering on holidays such as Memorial Day, as well as young people closely congregating at bars and probably other places, maybe beaches, 4 or 5 different listed places. We have 12 that are listed on the guide, likely also contributed. We're also sharing a 2,000-mile border with Mexico, as we know very well, and cases are surging in Mexico, unfortunately. It's with the president, and it's a big problem for Mexico, but cases are surging very sharply and all across the rest of the Western Hemisphere. 257 miles of newly constructed wall along the southern border has had a great positive impact on people coming in, and we have record low numbers of people coming in illegally. That's helped greatly. It was really meant for a different purpose, but it worked out very well for what we're doing right now and for the pandemic. Nationwide, beyond the outbreak in several states, cases remain low and very stable. 19 states have positive test rates of less than 5%. 8 states have positive test rates of less than 2%. Our nationwide positive test rate is beginning to decline and is currently at 8.8%, compared to over 16% at its peak in April. It's coming down. It's coming down fairly rapidly. Today, we surpassed, first time, we surpassed 50 million tests. That's far more than any country in the world. India is second, we believe. We think 1.4 billion people. That's about 12 million tests. We have 50 million tests. We're working with every state to ensure the supply of remdesivir for early case intervention and steroid treatment and various other treatments for those that are seriously ill. We're working very closely with hospitals, doctors, nursing homes, everybody. The remdesivir has proven to be terrific. Our case fatality rate continues to decline, and we want to push this rate even lower. The therapeutic research continues daily on new and very promising treatments, including antibody treatments and the use of blood thinners and steroids. A lot of different things are happening, and A lot of things are coming out that we wouldn't have known a number of months ago. We're doing tremendously well on therapeutic research and tremendously well on the vaccines. And frankly, therapeutically, or maybe a word even beyond that word is cure, would be the best of all. And we'll see what happens. But that would be great if we could go into the hospital and